Hey, welcome to your carrier update brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. What's going on, man?
Tender volumes hovering. We're still flat. Demand's still extremely high. We have not broken down any further than we really did when we started the month of March, really, after the winter freeze, the Texas freeze. Volumes still remaining extremely high.
And then back up.
We talked about it a little bit. Tender rejection rates coming down because we're seeing a little different mix of freight.
Right.
Short haul volumes growing in relation to long haul volumes. Long haul volumes are declining. So anything over about 450 miles has seen a steady decline in volume, while stuff moving under 250 miles showing a steady rise in volume in terms of the contracted space.
Right, so even what we call city or local is coming up as well.
And those are rejected at a lot lower rate. So there's the basic math of the situation. Yeah. We're seeing a change in the mix. Long haul volumes and tweener volumes, things like that, are still being rejected at an extremely high rate.
There's just fewer of them.
There's just fewer of them. So if you are out on the spot market, it's going to be that long haul tweener freight for the most part. And of course, brokers, that's where they play. You don't want to deal with the minimum freight because there's not enough juice out of that rock. You know what I'm saying?
Yeah, exactly.
Minimum freight doesn't have as big of a margin. So that's a lot of what shippers are pushing, at least on their contracted side right now.
That's a great tease to look at the data behind the indicators, right?
Right.
You need to have that detail behind just the try.
Yeah,
where the nation's going, but then you got to break it down by market, what's affecting you, but then where are you playing? Are you playing in the city or are you playing in the long haul?
Yeah, contract rates are getting increased a lot as well. Yeah. And it looks like shippers have figured out, hey, I can get capacity on the short haul side.
There you go. There you go.
Well, let's go ahead and look at the map and see where in the United States we're seeing some of these deviations. We didn't see a lot of action here over the last week or so. Tender rejection rates, for the most part, came down about 1%, actually about 0.75% overall, but there's still some underlying volatility here. Weighted rejection index on the map, this is the one that we like to show to see the most significant weekly changes in market activity. So if you were in the Memphis market, for instance, the red indicates loosening, or orange, whatever it looks like on your screen. It indicates loosening, so don't expect near as much activity out of Memphis this week versus last week in terms of spot market activity. Maybe even contract volume.
Route guide compliance is pretty good right
It's
now.
Getting better. It's not great.
It doesn't mean it doesn't mean it's good or bad. No. It means it's getting better. It's going towards compliance.
It's getting better compliance this week versus last week significantly.
Right.
Tightening in Kansas City still for like the fourth day in a row. Kansas City really bubbling up on this map quite a lot, showing basically tight through all of our indexes. And we'll dive into that in a second. But keep an eye on Ontario out there. It's kind of like that sleeping giant sitting out there, loosening slightly week over week, but there's still a lot of volume going on there. So let's go ahead and show Memphis and Kansas City real quick. So you can see here, Kansas City in the blue, Kansas City rejection rates in blue, huge uptick. And then right here at Memphis, we've got a massive downswing. So we came down on July 4th.
For most of July, it's just been dropping, right?
35% to about 29-ish% there to start the month. And then it steadily dropped. And then here to start the month of August, all the way down to 22%. And that's a huge drop. So month over month, don't expect near as much activity out of Memphis in terms of spot activity. And you're going to see.
I mean, it's still there, though. It's still 1 in 5 loads. Over 1 in 5 loads are still really going tight. But relatively, it's not as hot a market as it was.
Yeah, we're talking about short-term changes in the market, at least. So let's go ahead and drop into the Ontario, or I said Los Angeles, and this is what I wanted to tease here. So Los Angeles market, we've got outbound tender rejection index for Los Angeles. You can see we had a huge hump around the end of July, and it's kind of been middling around 17%, not really making, but look at this, the OTVI, tender volumes.
Through the roof.
Big increases, largest of the year. And a lot of this came out of the long haul volumes. If you have a Sonar subscription and you know what that long haul outbound tender volume index is, long haul volumes actually climbing out of Los Angeles right now, right in front of peak season for the maritime side.
Right in front of it, right? And they're already climbing. And now you got 30 ships sitting in San Pedro, and most of that stuff's got to go long haul as well, right?
And the rails they're already maxed out.
Rails are maxed.
So
warehouses are probably maxed in Ontario.
This downward trend in Los Angeles is certainly
Probably not going to sustain itself.
no. It definitely
Yeah.
high risk situation.
Definitely is. All that stuff is. I mean, you got all this volume coming out and more volume coming.
Yep.
And then that stuff's going to hit Columbus. It's going to hit Dallas. It's going to start hitting Atlanta and Chicago.
Christmas is coming still on
Christmas,
schedule.
I assume, is going to be here again this year. Then you're going to see the local and the short haul start to expand again, right? We'll see that fluctuation again. Yeah, definitely got to watch out for that stuff. Thank you so much, Zach, for that breakdown.